Thank you very much for waiting. First of all, I would like to thank you for attending this session in your busy schedule. We will now start the financial results for FY2022 and FY2023 for full year forecast briefing session for NYK. I am Okada. I am the head of IR group. I will be moderating today's event. First, let me introduce the presenter. First, the Representative Director CEO, Mr. Soga. I am Soga. Next, Vice President, Executive Officer, CFO, Mr. Kono. I am Kono. And Executive Officer and Head of Liner and Logistics Segment, Mr. Banno. I am Banno. First, Mr. Soga, the President, will give you the overview of the full year results of FY22. And then we will have some time for a Q&A session. I will explain how you can raise questions later. The presentation material used today are posted on our website, so please see them from the website. And also, this briefing session will be streamed online on demand basis, including the Q&A session. Let me hand over to Mr. Soga. I am Soga, the president of NYK. I assumed this role from April 1st. Thank you very much for attending this briefing session in your busy schedule. First, I would like to go over the overview of the results for FY22, and then I would like to cover the full year forecast for FY2023. After the explanation, we will take some time for a Q&A session. The presentation materials will be projected on the screen. And also, if you have already downloaded the materials from our website, you can also refer to those materials. First, let me cover the overview of the full year results FY22. Please refer to the table on page 6. The blue highlight at the center is the actual for FY22. The revenue increased year-on-year by 335.2 billion yen to 2,616 billion yen. Recurring profit increased year-on-year by 106.6 billion yen to 1,109.7 billion yen. Net income increased year-on-year by 3.4 billion to 1,012.5 billion yen. At all levels, the results surpassed the FY21 result, which was the historical high, and renewed the high levels. There are three reasons. One is that the liner trade, air cargo, transportation, logistics, bulk shipping, energy, dry bulk, automotive, transportation, energy, all of these businesses achieved a very strong performance that led to the overall strong performance. Another factor is mostly related to container shipping. After the summertime, the market softened, and also the logistics in the transport business slowdown was quite evident. In addition to container business, logistics and air cargo, and due to other reasons, dry bulk business in the second half slowed down. And in the middle of the year, the weakening of the yen became pronounced, and the overall revenue was lifted due to those factors. Due to these factors, in full year, we were able to achieve the record high results. Regarding the comparison by segment, please refer to page 7. Here again, the blue highlight shows the results for FY22. In the liners and logistics business, which is made up of liner trade, air cargo, and logistics, For liner trade, the recurring profit increased year-on-year by 57.1 billion yen to 791.3 billion yen. Air cargo profit declined year-on-year by 12.2 trillion yen to 61.8 trillion. Logistics profit declined year-on-year by 4.4 billion yen to 54.3 billion yen. In all areas, the strong first half results supported the overall results. In the air cargo and logistics, the profit declined year-on-year, but still, compared to usual years, the performance is very strong. In the total liner and logistics segment, the profit increased year-on-year by 40.5 billion yen to 907.5 billion yen. The equity method affiliate investment profit of ONE of 770.3 billion yen is also been recorded. In the bulk shipping business, the ordinary profit increased year-on-year by 73 billion yen to 212.1 billion yen. In the dry bulk business, the strong market condition started from second half of FY21 until first quarter of FY22. However, in the second quarter, due to concern of economic slowdown, the market dropped. However, the automotive transportation business volume increased, and also the tanker business market recovered rapidly, which compensated for the overall performance. So, as the segment record high recurring profit was marked. Please go back to page 3. Let me repeat. The total recurring profit increased year-on-year by 106.6 billion yen to 1,109.7 billion yen. Special P&L is added to this to reach 1,012.5 billion yen net income. Based on this result, we increase the year-end dividend by 10 yen to 170 yen per share. The interim dividend already paid out is 150 yen per share before the 3-to-1 stock split, and the annual dividend before the split will be 1,560 yen. After the split, per share annual dividend will be 520 yen, and the shareholder return ratio is 26.1%. Please refer to page 8. As shown on the table to the left, out of the total profit increase of 106.6 billion yen, large portion was yen depreciation's contribution. As you see from the waterfall chart to the right, the bulk shipping business also made a large contribution. So far was the overview of the results for FY22. Next, I will explain the full year forecast for FY2023. Please turn to page 9. For fiscal year 2023, we are forecasting the revenue of 2,300 billion yen, recurring profit of 200 billion yen, and net income of 200 billion yen. Recurring profit and net income is projected to decline substantially from the previous year. However, compared to the recurring profit of 44.4 billion yen that we have generated in 2019 with no special factors related to COVID, it is fair to say that we have been able to grow steadily. At the same time, it is in line with the target profit that we announced in the new midterm plan that we announced in March, that is 200 billion to 300 billion of net income per annum for the following 4 years. Though the numbers may seem a bit conservative, we think it is at an adequate level as the first year for the new midterm plan. Based on this forecast, we are raising the payout ratio outlook to 30%. We forecast 120 yen of dividend per share for the full year, 60 yen for the interim term, and 60 yen for the year end. As has been explained in our new midterm plan, we are planning to buy back 200 billion yen worth of our own shares in fiscal year 2023 and 2024 for the 2 years. When we buy back our shares, the overall number of shares is going to decline. In that case, their payout ratio of 30. If that is the target, this 120 yen number may change. In terms of how much numbers of shares we can buy back with 200 billion yen, it is dependent on the stock market. We will not. We have not included that in this forecast. This 120 yen dividend outlook is based on the number of shares before the share buyback. So FY2023 and FY2024, in these 2 years, we will buy back 200 billion yen worth of our own shares. In our new midterm plan, we have announced that. As early as possible, our commitment is to execute this. But when we announced our new midterm plan, there were questions. Why we're taking 2 years? Is it going to be 1 year each? I said that it is not the intention to divide this in 2 years or dividing it into bulks. In some cases, we will be buying back the full amount in 1 year. We will not exclude that option. That was my answer. Currently, in that sense, this 200 billion yen, 2 years, that is what I am saying. In this fiscal year, executing the full worth of buying back our own shares, that is one of our options. And currently, we are deliberating about the details. Alongside with dividend payment, we would like to return. We are considering the details about how are we going to return to the shareholders. Next, I will explain about the full year forecast by each segment. Please turn to page 13. On the right-hand side, this is the blue column on the right, the forecast number of FY2023. For the liner trade segment, we are forecasting 69 billion, down 722.3 billion year over year for the recurring profit. For the container shipping market, from the second half of last year, the cargo volume declined sharply, and at the same time, the spot freight rates have gone down significantly as well. However, in addition to the contracted freight rates that will manage to hold in the first half of this fiscal year, we anticipate cargo volumes will start to recover in the second half as excess inventory of some consumer goods will be resolved in consumer markets. Due to these factors and from the support coming from our financial income, we forecast profit for this segment. Going to the air cargo transportation segment, as announced previously, we are negotiating with ANA Holdings to transfer all of the shares of Nippon Cargo Airlines company. The forecast of this business is based on the assumption that the transfer will be completed by the first half. This means that we are forecasting a recurring profit of 7 billion for the first half. Compared to the first half of the previous year, profit is going to decline by 37 billion yen, and for the full year, the decline will be 54.8 billion. We are forecasting weaker cargo volume and the recovery of the international passenger market, especially impacting the Asian market. Overall, however, the yield will trend at a low level. We anticipate a soft market. As for the logistics segment, we are forecasting a recurring profit of 33.5 billion yen, which is down 20.8 billion year over year. We anticipate that profit levels for both air and ocean cargo will decline year over year, although the volume will go up and the profit will go down. On the other hand, in the contract logistics business, contribution is coming from price revisions and new business in North America. We forecast that the drop of the profit level will be limited. In the bulk shipping segment, our forecast is 102 billion of recurring profit, which is a 110.1 billion yen decline year over year. In the automotive transportation business, although volumes are expected to remain unchanged from the previous year, we forecast a slightly softer market as we anticipate some used cars and high-end cars and construction equipment go back to utilizing container ships. Furthermore, In terms of the rates for the automotive transportation, vessels are going at a very high level. And last year we thought that maybe this will go down, but for the time being, we think that the freight rates will stay at a high level. And basically this will be reflected in the cost. For the dry bulk business, the small and medium-sized vessel segment is expected to trend below the strong levels during the last fiscal year. In the last fiscal years, specifically, in terms of what basically some cargo that has been coming from the container business came over to these dry bulk business in last fiscal year, and that has contributed to the business, but this will not appear this year, leading to a lower outlook. In the energy business, LNG carriers and offshore business is expected to remain steady, supported by mid to long-term contracts. But the VLGC market is expected to fall from the high levels at last year, specifically because new ships is going to be introduced into the market. Although slightly, we think the market is going to soften. Going to page 16. This slide is the comparison between the 2022 results and the FY26 forecast that we announced in the midterm management plan for each of the indicators. Excuse me. Yes, this is the right slide that should be shown. So this is a comparison between 2022 and FY26 forecast. For all of the indicators, we think we were able to make a good start against the 2026 targets that we have announced. One thing that stands out is that the shareholders' equity and shareholders' equity ratio is higher than last year's results. But please be reminded that this does not include the share buybacks that we are trying to hammer out the details. Lastly, please turn to page 17. This slide shows the status of the trends in the recurring profit of the stable freight rate business, which we have highlighted in the previous midterm plan, including the forecast for FY23. Among the bulk shipping business, those categorized as stable freight rate businesses will be on the left-hand side, the pink-colored portion of the bars. In 2023, it has jumped up, but overall, the terminal business under the liner trade segment and the logistics business as well all have grown steadily. This jump up in this area, it is categorized as a stable freight rate business, but by slightly, it has been impacted by the market rate. So automobiles basically is what is contributing to this rise. With this, I would like to end my presentation about the forecast of FY2023. On our website, following the slides that have been shown today, we have included an appendix that has reference material such as assumptions for the major indicators for each segment. Please refer to this on your leisure. So that's all from me. Thank you very much for your attention. Thank you very much. We would like to move on to Q&A session. First, I have two questions. The president talked about the freight rate of container shipping. Until first half, there was a positive impact of the high freight rates. I was wondering what that means. From May, North America Trade SSC annual contract will be renewed. Are there customers with longer contracts? So could you explain why there is a positive impact up to first half? And my second question, 200 billion of recurring profit for this period is conservative. When you break it down to the segments, Which part is conservative? Do you have any comments you can share? Those are my two questions. Thank you very much for your question. Regarding the freight rate for container shipping, Mr. Banno will add explanation later on. Regarding my explanation, first point is, as you have said, for SC, for North America trade, the renewal is usually May 1st, and we have been negotiating, and some contracts are beyond May 1st, and for that part, the volume is not that large, but the high freight rate will continue to some extent. When we negotiate on SC, what would be the agreed freight rate? Compared to our assumption, it's slightly higher. The spot rate dropped significantly, but our rate was rather higher than the spot rate. So from that perspective, the first half will not decline as much as the spot rate. That is our forecast. Banno-san, do you have anything to add? What Mr. Soga said is that the renewal is on May. So April and May renewals, the higher long-term contract rate will be applied. So especially in the first half of the first half, that impact will be felt. So that is the meaning. And the second question, the recurring profit of 200 billion yen on FY2023, the area that our assessment is conservative is the bulk shipping segment, especially dry market forecast. This area, we are taking a stricter view. For all type of dry ships, vessels, we are setting our assumption conservatively. As I have said, for automotive transportation, there are several negative factors that cannot be avoided this fiscal year, and we factored them in. So it's not that last year's strong performance will be maintained as is, and that is another area that we are setting conservative assumptions. Liquid, LNG, and tankers, those areas, especially for LNG, this is supported by medium to long-term contracts. So this area will be stable. There's no particular inclination of views. There's in terms of the tight supply-demand market continuing, we are following that assumption. For logistics business, to a certain extent, we are conservative. As I have said, the forwarding business for air and ocean, the cargo volume we expect to recover, especially for ocean. The shipping companies, container companies, the price gap from procurement is suppressed, and the profit level will decline year on year, and that view is slightly conservative. So that was my response. Let's go to the next question. My first question is, for the automotive transportation business, the current demand-supply situation and in the following a few years demand-supply situation, what is your take on that? And based on this anticipation, for the Japanese car makers, basically you negotiate about the price increases or price revisions every year. So what's going on there? So I would like to confirm about that as my first question. And my second question is that at this time, Kondo-san has become the CFO. So in terms of, I have not heard what your sense is in terms of what you think your role should be. Are you focusing on balance? In terms of the balance sheet, I think there are various ways to utilize the balance sheet. So I would like to ask the CFO about his views. Thank you for your question. So I will respond for your first question. For the automotive transportation market, well, last year around this period of time, actually, that the end of the year last year, specifically for the North American consumption demand, there was this threat that it's going to diminish, and we were looking at this conservatively. But actually, what happened was that this there was no drop in consumption. Actually, the appetite for consumption has been remaining at the same level. As far as we know currently, the current demand supply balance, or rather, let's say demand in terms of the demand for the following couple of years, I think that it will continue at this level. But in terms of supply, in terms of the capacity for the vessels, as you know, since in the early years of COVID, there has been shippers who have thought that the cargo volume is going to stop. So for the older vintage ships, they scrapped them and they did not build new ships. So and the demand did not go up. But in terms of supply, since 6 months after COVID, well, there was a sharp recovery. So the tight situation of demand and supply is still continuing until now. I assume that this situation will continue from this year until the end of next year, and after that, all the new bulk ships for automobile transportation is going to come into the market, and I think the market will start to soften after these ships has been delivered. In terms of this year outlook, so we have to be aware of the balance between the container ships, as I said in my presentation. So the high rates at the high unit price cargo, like construction equipment, and they used to be utilizing container ships, but there was no capacity, so they started to utilize the automobile transportation vessels, for instance, forklifts or bulldozers or small cranes, excavators. Those tend to be high margin or high unit price. But the container ships space has gradually become available, and they start to go back to utilizing container ships. So with the additional capacity, there are passenger cars that still has a lot of backlog. In terms of the freight unit price, it is lower, but this will start to come back. In terms of the utilization of this space, it's not that we're going to have a lower load ratio, but if you look at the overall freight income level, because of the difference of the mix, we think that we're going to see a lower level of revenue. So this is going to happen this year and maybe continue into next year. And another point is about export from China. In this past 2 to 3 years, it has doubled each year. But this year, maybe it will come to a saturation point for some kind of a plateau. Maybe it will be a plateau. The reason I say this is the European customers who has been purchasing. They have been looking at quality, looking at after service. I think they are trying to find out the level, and I think basically they will analyze it this year. So export from China, it has been dramatically growing, but this growth may be more or less become moderate this year. That is one of another assumption. So in terms of the contracts with Japanese customers, in reality, the contract for the freight rate, sometimes we renew it every year, but in some cases we renew it when something happens. So maybe it's a kind of a semi-permanent type of contract. So there are two types of contracts in Japan. Currently, for the LNG energy ships, the premium, we are trying to put a premium on the freights, and we are negotiating. But if based on the tightness of the demand supply situation, and raising the rates on the container ships, we're not doing that. But for the overseas customers, like overseas auto OEMs or European OEMs, for basically depending on how the container ships are behaving, they are raising their rates or reducing the rates dramatically. And I think this will continue to be the case this year and into next year. So I hope I have answered your question. Thank you. Next, you have Mr. Kono, our CFO, will respond to your question. Thank you very much for your question. So this April, I have been assigned as a CFO, and I'm trying to catch up with my role or responsibility. Just to introduce myself, in 2006, I have been working in the energy division. So for 17 years, I have been working in the energy division. Before that, in the 2000s, beginning of 2000s, until 2006, I was in the corporate planning division. Back at that time, there has been a bulk boom in dry bulk. I think you remember that. There was, we ordered a lot of the vessels back at that time. And in terms of the investment standard as a company and in terms of the introduced IRR, ROIC, we have been discussing about this investment criteria. And from before, in terms of investment, we have been utilizing and focusing on IRR, not only this, of course, but in terms of the criteria, we have been utilizing IRR. But in terms of the segment performance analysis or evaluation of ROIC, we have been aware of ROIC and looking at that. But in terms of the assessment, we haven't been using that. But this time around, in the new midterm plan, we have referred to ROIC, ROIC, and going forward, in terms of the assessment of a company performance, we'll be utilizing ROIC. So maybe for the first time in 17 years, maybe, well, this is my personal opinion, but by utilizing ROIC, so I am not in the shipping business, but the financial situation has recovered a lot since then. And based on the financial condition that we have right now, I would like to look at ROIC and other indicators so that we will be focusing on capital efficiency, how we utilize capital, and then how we return to the profit to our shareholders by striking a balance of these factors and enhance the corporate value. So this is a very challenging but great job that I have. So another point I want to make not as only as the CFO, but as of the 1st of April, the ESG strategy division has been started up, and I am in charge of leading this. So decarbonization and GHG reduction is the two points that we are focusing on. In terms of the reduction of GHG, from last year, for next year, Europe, carbon is going to be considered as cost. So the reduction measures that we are focusing on this year, and to accelerate these measures, currently some of that will be counted as cost, but going forward, this will be our competitiveness. I want, in terms of the administrative accounting standards internally, I want to put in a framework. So this can be considered as a competitiveness. So this is a very major task that I have. So decarbonization is, from a company's accounting standard, there will be an impact, of course. So my role is to manage this side as well. So this is a big challenge for me. So this will be my aspiration, so to speak. Thank you very much for asking me for my comment. Thank you. We would like to move on to the next question. I would like to ask one question, which is related to NCA. The first half recurring profit is factored into the plan. Let me confirm, along with the sale, there's a cash income or a special P&L is not factored in. Am I correct? If that is not factored in during the period, you will need to reflect that to your plan. Price is not determined yet, so it should be difficult, but will that impact the dividend plan? Will that be the magnitude? I understand this is a difficult question, but if there's anything that you can share with us, please. Thank you for your question. NCA, topic on NCA, as you say, based on the basic agreement, we are working towards final agreement, and we are in the process of negotiation. Therefore, the price or the method of share transfer is under negotiation. So in this forecast, we could not factor them in terms of the numbers. So this impact is excluded from this forecast. Once we reach a final agreement and we are to execute the transaction, at that point we will disclose. And in case we need to make adjustment to the current plan, we will share the information with the investors. So far, we cannot say for sure, but the dividend assumption and share buyback plans, we do not expect there will be a major impact on those. Thank you. Understood. Any other questions? So I have a follow-up question. In the midterm plan, this 270 billion, but each business, is there any businesses that is going over that or below that? And this following few years, how are you going to increase the build up the profit so that you can reach these targets? Can I confirm about that? Thank you for waiting. Thank you for the follow-up question. What you have asked is that our midterm plan that the last year will be FY2026, that is 4 years from now. At that point, the target recurring profit is 270 billion. I think that was what you were referring to. Yes, that was what I was asking. Overall, to reach this target, FY2023 forecast will be 200 billion. So to be able to achieve 270 billion, it means that in 4 years we'll have to accumulate 70 billion of recurring profit. So that is what we are anticipating. So where is this, what a segment of business is going to contribute to this increase? So ONE's numbers seems to be quite substantial right now. But we are looking this, analyzing this closely and looking at other business from ONE business, like environment-related responses, investment in vessels. There's some major capex that we are anticipating. So we are considering how much return that we can get from these investments. But what we can say now is that we for the automobile transportation vessels that we have already started preparing, utilizing LNG. I think basically we'll be using LNG as fuel. So we're going to have decided we're going to construct 20 vessels until 2028. We already ordered a lot of that. So already 4 of these are operating. In 2024, 25, 26, gradually these will be introduced, will start operating. And in terms of the contribution to the profit, I think these will be a great contributor. In terms of the LNG, we are doing our best to prepare these vessels, but in terms of when they'll start operation, will be after 2026. A lot of them will be start operation after 2026. So in terms of the contribution coming from the LNG, is more or less limited. On the other hand, the gas, LPG, VLGC is what I am talking about. For the VLGC, this year the market is going to soften. That is our outlook. But I think the actual demand will grow robustly until 2026. For the besides ONE, this will be another factor that will contribute to our profit. So in terms, I think we have to do a close analysis of business besides ONE. But that said, these businesses outside of ONE will be the contributors to reach this 270 billion yen. In terms of ONE, well, maybe this is preaching to the choir, but from 2024 and onwards. So there is some concerns that there will be a belly capacity oversupply that will start from 2024. So in that sense, in terms of ONE, how are we going to bring this to a higher level and a more normalized level? So I think we have to take various measures to be able to achieve that. Thank you. So another follow-up about the container ships. Currently, the demand-supply situation, what's happening there, and North America freight rates for the April, I think they have been able, the spot rate has been increased. In terms of the demand-supply situation of containers, what is your understanding about that? Of course, I think basically some are reflected, some are not to your outlook. But if you look at the, in terms of the situation, volume, or the construction of the ships, what's happening right now? So I would like to ask Mr. Banno to respond to this question. Thank you for your question. So in terms of demand supply for the vessels, there will be, in the following 3 years, there will be new container ships that has been ordered. It will gradually be start operation, but the majority of this will be coming in from the second half of 2023 to 2024. So in that sense, the number of ships is going to increase. So in the past 3 years, the tight capacity of these ships and all the cargo cannot be loaded, I don't think that is going to be a repetition of that situation. That means that the freight going up substantially in the following 2 years it's not likely to happen. And that is our take for the midterm. But for the short term, on the mid-April, the freight has been raised on the spot market, but the U.S. economy has not fully recovered. And if you look at the cargo volume and the inventory situation in the U.S. has not changed, so the cargo volume has not recovered in full. So the raise in the freight rate from April onwards, is it going to continue to rise? We are not that optimistic. So currently, after the rate has been raised, how this is going to be? Is this going to hold, or there is a possibility that the rates are going to fall again. So that's a short-term outlook. On the other hand, the container ships or the liner business, if we want to have a forecast for the 1 year, well, the first half, the rates will be relatively high. Maybe we can enjoy the contribution coming out of that, but afterwards, beyond that, it's going to drop. But from fall, of course, seasonality is one reason. I think the U.S. inventory will more or less start to go down, and the cargo volume will start to recover, and with that, the spot rate will start to go up. If that's the case, so in some contracts are shorter term, not long. So for those type of customers, there's a lot of room for us to negotiate for the renewal of the contracts. So toward the second half of this fiscal year, I think it's going to recover gradually. So that is the assumption behind our forecast. Thank you. It's a little bit early, but with this, we would like to close the Q&A session. Thank you very much. With this, we would like to close the financial results presentation for FY 2022. And thank you very much for your participation.